Bell rolls is the reporter thrown into the secretive world of the Forex Super Model, where nothing is as it seems. Beware the techno monk, and steer clear of Professor Code and his two assistants. Give the senior trader a wide berth, and don't expect any sense from the risk manager.
Good morning, I'm Professor Code and this is the Forex Super Model daily briefing for Thursday the 11th of November 2021. Time has just gone 4:30 in the morning GMT. Asian session coming to close, European session firing up, our lunchtime North American session. Right, Wednesday the 10th. Yesterday then we had a positive unopposed driver in the dollar, plus 372, no backdoor flows, the opposing negative flows mainly coming out the pound at minus 197, out the euro at minus 115, and the yen was a negative rock at minus 60, activity plus or minus 372. Intra-week then becoming more relevant. This is from Monday the 8th, open to about 15 minutes ago. We've got a positive unopposed driver in the dollar again at plus 228. No backdoor flows, the opposing negative flows mainly coming out the euro at minus 119, out the pound at minus 61, and the yen is a negative rock at minus 48, activity plus or minus 228. Right, so yesterday then we had this big pump up in the dollar to the exclusion of all else in the majors, and the pound took the brunt of it, excuse me, and the euro next. And if you look at our video yesterday, we suggested that this was probably likely to get a pump in the dollar, but that's irrelevant really. The way the flows are going now, we're into the Asian session. We've got a negative unopposed driver in the yen at minus 52. No backdoor flows, the opposing positive flows mainly going into the pound at plus 24, into the dollar at plus 18, and the euro at plus 10, activity plus or minus 52. So we've got a yen weakness driving now. Remember we had a bit of a sell-off in equities yesterday as well, and the yen trend that would have, but we had a negative yen yesterday. That was basically because so much was going into the dollar, and this morning we've the Asian session we've got this negative yen, and we've got the pound's bounced a little bit, the dollar's still a little bit strong, and the euro's come back a bit as well. So we'll stop it there and write up the flows. Right, we've written up the flows then. So the euro is strong except against the dollar, the pound and the Swiss. The yen is strong except against the dollar, the euro and the pound. The pound is strong across the board. The Swiss is strong except against the yen, the dollar and the pound. The CAD is weak except against the AUD and the NZD. The AUD is weak across the board. The NZD is weak except against the AUD, and the dollar is strong except against the pound. What's going to knock it about, or has knocked about? We've had softer AUD employment data, and that's being reflected in the weak AUD complex. And we've got GBP GDP today. Tomorrow Friday we've got Michigan consumer sentiment, and looking just into next week, Tuesday the 16th and Wednesday the 17th we've got some tier 1 GBP data, so that sort of boxes that in for you. Anyway, we'll stop that there, write up the asset classes and do the final analysis. Right, we've written up the asset classes then. So US dollar index, it had a big break, it's had a break above the resistance. It's plus 0.15 above the resistance, so it's broken 50% above the model resistance, and that was predominantly that big pump up yesterday in the dollar we were talking about. Gold then normally doesn't like a very strong dollar, and it won't be liking it particularly, but it's 0.26 from the high. But gold's getting a boost from the apparent rise in inflation as a hedge. Oil then did that big break. It's now come back 0.2, so it's 20% below the high. Wall Street S&P Tech, they did this break and they've come back a little bit. Wall Street is 0.125 from the high, 12.5%, an eighth off the high. S&P is 10% off the high, and the tech is 15% off the high. So they're in pretty much lockstep, but the tech's still a little bit weaker. Wall Street next, and the S&P strongest relatively speaking. US 10-year in the bun then. So the US 10-year, you've got this big, remember this is the price, you've got this pump down in price, rising yields in the US, and it's 0.20 from the floor, and the bund is 0.45 from the high. So the bund is is above half marks, which means the yields are relatively weak, and the US 10-year are relatively near the floor. So it means the yield differential is quite significant now. Copper's been charging around all over the place, but it's soft basically. It's 0.4 from the floor, 40% above the floor, and US steel is at half marks. So we'll just get rid of that, and then we'll do the final analysis then. So if I can remind you that today is Veterans Day in the US, so the US markets are closed. So that's going to have a bearing on the North American session. And the lead up the end of the European session. Excuse me. Right. Dollar, euro, yen, pound, CAD, AUD, NZD, Swiss. Okay. So we've had this break in the dollar, and we've had this pretty much pump down in the pound. Oil's come off a little bit. The AUD's soft data, and that's come off. If you look at if you look at the flows, the NZD's soft as well. If you look at the Asian flows, then we've got a weak yen, and equities had a bit of a rough ride yesterday, so we've come off in equities. So that's where we are there now. The likelihood is we're starting to see, if you look at the flows, you've got pound strength, dollar strength, and you've got AUD, NZD and CAD weakness. So you've got weakness in the commodity currencies. So you've got weakness here. You've got pound strength. You've got yen weakness, and you've got dollar. Dollar strength and euro strength. Now, this is a sort of a mixed risk-on picture, if you like. You've obviously got this negativity in the commodity currencies. You're starting to see yen weakness, which is likely to lead to neutral to positive equities. So you've got this sort of like mixed situation. As I said, on the positive in the majors, you've got the dollar and the pound, and on the negative, and the euro's sort of near neutral, and you've got yen negativity here. So we've got this mixed picture, and bear in mind we've got this American break holiday, Veterans Day today, and tomorrow we've just got Michigan consumer sentiment, and looking over tomorrow into next week, you've got China retail sales and all the rest of it. So it's a bit of a busier data week next week. But so what's going to happen today? We think, well, you're going to get. I don't think you're going to get much of a pullback in the dollar. Quite frankly, the dollar's pretty set on an upward trend now. Whether it starts charging on too much is another matter. You're going to get a bit of yen weakness. Dollar yen off the back of a bit of a bounce in equities is probably worth looking at. Long dollar yen off the back of a negative equity yen transmission, and commodity currencies are soft. They have the potential to bounce if equities really start steaming. So that's just something to bear in mind. So that's where we are. Hope that was useful. Thanks for watching. See you tomorrow. Goodbye.